All right, let's continue with section 13.5. We're going to look at bonds and then mutual funds, and then that'll be it. All right, so bonds are different from stocks. All right, here you, in essence, lend money to a company and then receive an agreed upon rate of interest for the use of your money. So they pay you for using your money. All right, so in this case, it's called buying a bond from the company. Okay. The bond or loan is issued with a stated term, a lifespan, and then the bond matures and the principal or face value is paid back to you. Okay. So here we have 5,000 invested in a 10-year corporate bond that pays 7.5% annual interest paid semi-annually. And our job is to find the total return on the investment if it's held to maturity. Okay. So for bonds, you just use the simple interest rate formula that we had way back in the first section that we did. And you're going to plug in the 5,000. You're going to plug in your interest rate as a decimal, and you're going to plug in the time, which is 10 years. Okay. And really that's all you're going to do. It says paid semi-annually, but there's no compounding. Like they're not going to pay you interest on your interest. So that doesn't really matter. Okay. So you just work that out and you would wind up making $3,750 at the end of those 2 years. Okay. All right. Now a mutual fund. This is the kind of stuff I tend to do because I don't do much with individual stocks, not because it wouldn't be a good thing to do, but I just don't have the time to, or I don't take the time to really learn that much about it. So I'm a little uncomfortable doing stock trades and all of that. I don't really understand how it works precisely. But mutual funds are something where someone is kind of managing this fund that might contain a lot of different types of investments, instruments, stocks, bonds, money market. Okay, so wanted just to talk a little bit about that. So with a mutual fund, there was a nice chart in the text that I wanted to share with you that talks about the advantages and disadvantages. All right, first off, you're diversifying your investments. So everything's not in one stock where if that company fails, you might be, losing your money and then you don't have any other investments to counteract that. All right. You might have access to brand new stock offerings, whereas an individual, I might not have access to that. There's a whole lot of people investing in the same mutual fund. So that means it's a lot of money being invested, and it's not just depending upon the little bit that I might put into it. There's some professional managing it who's taking the time to do all of that. Okay. The problem is that means we have to pay for that person who's managing it. And you can't always see, clearly how much you're really paying for that kind of thing. So disadvantages would be the impact of a one-time charge and recurring fees. There's some hidden costs of having a broker or a professional manager of the fund. And then it talks a little bit in here about some other things that you might have some tax liabilities, and your manager may not be doing what they were supposed to be doing, what they stated they would be doing, and so on. All right, now, so mutual funds are a collection of a lot of different investment instruments. And so it can be kind of interesting to try to figure out then how many shares, or try to think about how much you owe and how much value, or not how much you owe, but how much value these shares all have. So I wanted to look at that a little bit. So it's a big fund that's being invested in a lot of different via investment instruments. So A is the total fund assets. Assets are good things, money that's money you're making. And then liabilities are bad things. That's money that you owe. Okay. And so what we're going to do is we're going to figure out what the net asset value of a mutual fund would be. It's kind of like figuring out what the cost of one share in a mutual fund would be. All right. So what you do is you take the total assets, subtract the total liabilities, and then divide by how many shares there are. Okay. So here's a mutual fund that has $520 million worth of stock. It has $700,000 in cash and $300,000 in other assets. And then it has $4 million in liabilities, and there are 30 million shares outstanding. And the question is to find the net asset value. So what I'm going to do is I'm going to wind up using this formula. All right, so for the A, I need to add the 520 million, the 700,000, and the 300,000. So 520 million, okay, 520 million plus the 700,000 plus the 300,000. Well, the 700 and the 300, that would be a million right there. And so that means that the A value would be 521 million. Okay. That's going to add up to be $521 million in assets. And then see how there's 4 million in liabilities. Instead of carrying all those zeros in there, I'm just going to subtract 4. And I'm going to remember that was in millions. And then I'm going to divide that. So 521 million minus 4 million, that would turn out to be 517 million. And then I'm going to divide that by 30 million shares, which were outstanding. And that would wind up giving me $17.23. So that's like the value of one share of this mutual fund would be $17.23. Okay. Now, if that confuses you to not have all the zeros on there, then you could take the 521 million, just add the 6 zeros, minus the 4 million divided by the 30 million. And you'll get that same answer when you're finished. You'll get $17.23. All right, let's go ahead and let me go to the homework and do a question out of homework that you have on that. So let me see. So it's in the next section. So let me actually go out of this one and I'll get in there real quick, hopefully. Let me just run to 13.5 and take a look at one homework question in that. Let me just preview it. Okay. So as you go through this homework, it's just going to have you do things like once it gets out of those concept checks. All right, it's going to give you a stock table and ask you for things like the closing price. This is a pretty quick homework. Okay. Or the 52-week high. Okay. All right, but near the end, they do some with mutual funds. Let me go to the end and show you. Yeah, so here's one. All right, so let's do another one like what we just did. So let me take a snip of that, and so I can write on it, and we'll go through this with you. All right, so here we have one similar to what we just did. So the amount we're investing is $6,600. Okay, so before we figure out how many shares we can purchase, we need to get the net asset value. So we're going to use that formula. The net asset value equals the total assets minus the total liabilities divided by the number of shares outstanding. Okay. And so on this one, it's 771 million in assets and 45 million in liability. So I can subtract those and divide by the 40. Okay. All right. When I do that, let's see what that turns out to be. I get 771 minus 45, hit enter. Make sure you try these because these are not typed in correctly. You need to do either this and hit enter and then divide by 40, or parentheses 771 minus 45, divide by 40, one or the other. Okay. And then you wind up with this $18.15. That net asset value means one share, like one part, one share of this mutual fund would be that much. Okay. All right. So we're going to put that in. So let me go back to the actual homework. 1815 would go right here. Okay. And then it's going to ask you a follow-up question. Okay. So the follow-up question would then be, well, how many shares did you purchase? And that's when you use this other part. I'm going to need to snip it again so I can write on it. Okay. So that's when I go back and I use that $6,600. That's how much I'm going to invest in this mutual fund. So if I'm investing this much in that mutual fund and each share is 1815, I'm going to divide this by the 1815 to find out how many shares I can purchase. Okay. So I'm taking the 6,600 and dividing by 1815, and that tells me that I can buy 363.63, and it repeats on and on like that. But notice it says nearest whole number. So I can buy about 364 shares. Now, I don't think they would actually round up like we're doing here. You'd probably just buy 363. Or you'd have to come up with a smidgen more money to get the 364th one. All right. So I'm going to go back to the homework and type in the 364. And that would be how many shares we could purchase. Okay. All right. So that's that last question that deals with mutual funds. And I think you won't have a problem with any of the others because we've done things like it. So you should be okay.